Hi, I'm going to give an update on the small account I've been doing for you guys. For all the intro, tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. No shock looking at me then, because I'm not exactly polished or Brad Pitt, but I am a pretty good trader. And that's what I'm trying to kind of show you guys with this channel. Put trading in the real world, if you like. And if that sounds good, please click the subscribe button. Genuinely helps. If you've got a question or a query, drop it in the comments below. I genuinely answer every single one of them. So first of all, before I move forward, I'm going to apologise for the last video that I did. The audio was shocking on the second half, hence why I'm redoing it right now. So apologies if this all sounds a little bit familiar. I dropped a clanger. I am not Steven Spielberg. I'm not a filmmaker, and I do the YouTube channel purely for enjoyment. And as you see, I've got a kind of a setup behind me. It's getting better as time goes forward. I forgot to switch the mic on, and it picked up off the mic off the laptop instead of the proper mic, and it was shocking. So just to make things a little bit clearer, I finished my day's work yesterday, finished off my spreadsheets, and I'm going to do an update today with clearer sound and hopefully give you some little bits of advice about how to build a small account. And I'll touch on certain elements of that when I'm on the screen and showing you the spreadsheet, etc. But I'm going to touch on to a subject that was in the last video. Really because I think it is important, and with the video being so bad, I just wanted to go through it again, just so you can hear it clearly. Now, when you're trading, the biggest emotion that you have is fear and greed, all right? The FOMO, fear of missing out. But that is really just for bigger accounts, good size accounts. There is another type of emotion that is more detrimental to a micro account, a small account. And that is the emotion of I couldn't care less. And because they couldn't care less, you take too big a risk, which can damage the account. So at the moment, this whole process, if you haven't seen it, started in October. And I started with a couple of £100, and the idea was to earn £5 per day over a 4-week period, like a 4-week month if you like. And I easily achieved that because I was only looking for a fiver. But the percentage growth on the account was massive. And it's because I looked at it the way that I look at my normal wage accounts and the account I used to buy a car sort of thing. Anyway, as I finished that task, I was asked if I would do it again. Well, there was £300 left in the account at the end of the process because I'd been taking money out of it as well. So I said, right, well, what I'll do is we'll see how much a little mini break, a holiday if you like, would cost. And we went on to a popular website that sells holidays, and we found a little 3-day break for just shy of £150 a head. So for me and Winky to have a break, £300. Right. So I was going to turn that £300 into £600 in order to pay for this holiday. And that's what these updates are about. So I'm going to show you where we're up to. But I still had to manage it the same way and be very careful. And we're dealing with little bits of money, 25p a pip and things like that. So it's a long road to take. And the results are pretty good. But I've been watching some of the guys that message me, one thing and another. And instead of putting 25p a point on, They'll put £1 or they'll push it out to £1.50 a position. Get it wrong. Not kill it when it should be killed and damage the account badly. And the only way that they can move forward is to put more money into the account, which defeats the object of growing the account in the first place. And when I was talking to these guys, there was a common theme came through. If only. And I'm sorry if you've heard this before, because I did do it in the last video. And I was kind of exploring what if only is. And the crux was, if only I had enough, I could trade the DAX. Because the DAX moves pretty quick. Then I'd be rich. No. If you can't afford the DAX, trade oil. It's a fast moving market, but it doesn't cost a lot to get into it. You know, if only I could trade one of the bigger fast moving currencies. Pound versus the yen. You know, it's quite expensive to open a trade. It's about £500 worth of margin to open up a 50p unit. Why? Trade euro dollar. And I'll touch on this over and over. Just look for products that you can trade. And if there's nothing there, sit on your hands. You see, the if only emotion coupled with the couldn't care less emotion is the reason why you're not moving forward. Because if only I could do this. So you're chasing a rainbow. Well, we all know rainbows don't exist. You know, oh, it's only 200 quid. If I lose it, so what? But if you're going in with that attitude, you've lost it before you start. It's just simple things. And you've heard me say a very famous quote by Socrates before. You know, and it is, know thyself. It is the beginning of wisdom. So you have to know within yourself whether or not you can actually control your emotions. And then there's a very famous book, The Art of War by Sue Shan. I think it's Sue Shan. And there's another quote in that, know thy enemy. And it's another good one. And I'm going to touch on this in another video because that goes on into a very good state of mind. And it's about if you know yourself, you're halfway there. If you know your enemy, you're 100% there. And the battle is won before you've even stepped on the battleground. But if you don't know yourself, the enemy has the edge. And if you don't know yourself and you don't know the enemy, you've lost before you've stepped onto the battlefield. And I hope that kind of makes sense. It's all about the emotional mindset game. It's a good book. It's called The Art of War. It's worth looking. There's a couple of other good books that you can look at as well. Naked Forex. Reminiscence of a Stock Operator is excellent. The Life Story of Jesse Livermore. Some links for it in the description if you're interested. But Jesse Livermore is a superb read. The Great Plunger. This guy had more money than anybody. He just traded from nothing to the top, fell off the top, went to the bottom, crawled back up the ladder. The whole works. But he's got some real pearls of wisdom in that book. And one of them is something that I took to heart. And it's what I said at the beginning of this conversation, or at the start of this conversation. If the trade is not there, don't take it. Sit on your hands. The money is made in waiting. And you're going to see that on these spreadsheets. Because sometimes I have to wait a couple of days just to get the setup right. Because I was limited in the amount of markets I could trade. But once you start building the account up, those opportunities become more frequent. Because when I started this, I was looking at gold because it's cheap, but it doesn't move as big as what you think. So it was a fiver here, it was a couple of quid there. Then I could trade oil. So it was another fiver here and a couple of quid there. But all these fivers and couple of quids added up. Built the account up. Then I could trade euro dollar. Euro dollar has an opportunity virtually every single day. get another 5, 7 quid. Build the pot up, could trade the DAX. The DAX definitely has an opportunity every day to trade the DAX. So now I've got oil, I've got euro dollar, I've got gold, I've got DAX, trading the FTSE. All these different products. And eventually I went from having one product to what I call a window of the world. Because I'll select a section of product, put my teeth back in, a selection of products. So normally I keep it to about 8 because I can easily watch 8 products. And then if anything else comes outside of those 8, it's just a flick through and it's very easy to find, but I'll focus on the window of the world for that given week. And that's what helps me.
Isn't that logical?
So let me jump on and I'll show you my spreadsheet and I'll go right through it and then I'll pull up live account. I don't do that very often for obvious reasons. There's a lot of sensitive information there, account numbers, etc. that I don't want to share. But I'll just give you a quick glance at it. And like I say, if you've got any queries, I'm easy found. Contact details are in the description, etc. Talk to me. I'll help you. You know, I genuinely will. As any of the guys in the Telegram group, if they're watching this, they might drop a comment in and let you know that I am pretty transparent in what I do. You know, they ask me a question, I go right through it. You know, I'm not one of these clowns.
You ding dong!
Oh, make it stop!
Who promise you the earth and deliver nothing. You know, I promise you nothing, but I deliver a lot. Hope that sounded quite right. And anyway, stop me rambling on. Let's jump onto these charts and I shall show you. Okay guys, so a little bit like what I was saying in the intro and having a little bit chat about small accounts. I'm going to show you where I'm up to in real time. We currently sitting on a Saturday morning at just after 10, as you can see there. And this is the state of play at the moment. And personally, I think it's doing quite well. We edging up the bid size. We're actually a bit higher than that now. The last one I put in was up to £1 is the highest point, so I need to alter that. Only human, guys. Sometimes I do forget to do things. And what we're looking at mainly is these trades. As you can see, I haven't taken that many. I've taken 44 positions across multiple markets, and we're dealing with pennies, 50p's, 25p, up to £1. So we're not talking massive amounts of money. This here is the balance change, which is what I keep an eye on. And if I can get them over a percent per trade, I'm doing quite well. And the idea is to have more green than anything else. And certainly not a red one, because that's where I'm stopped out and I actually lost money. But my hit rate looks good, because as you can see, it's at 95%. But it's actually because I do stop myself out for pennies. They are 3 off the belt. 1, 2, 3, stopped out, and I got next to no money out of them. Again, stop outs, 15 and 40p. And what they are is, if I see the market moving against me, even though you see me with wide stops, I'll just kill the trade. I'd rather kill the trade, let it go through where the entry point is, put a new order in and let it come back and take me in. And I do this on my main accounts as well, which is one of the reasons why I look consistent more than most people. I probably lose just the amount that anybody else does in number of trades. The difference is I can recognize when I'm wrong and I'll kill the trade. All right, I'm disciplined enough to do that. I don't let the trades run away from me. And that's all part of my risk management. And management is the key, or the key word rather, because I manage the trade. I don't put my finger in the air and think, oh, well, I wonder. I've got a good idea that I'm going to be correct before I even press the button. Whereas a lot of traders, they kind of congratulate themselves when they get a 30 pip win. Why? You know, you should be doing that anyway. You know, it's your job. It's what you're supposed to do. I mean, when you're at work and you've completed your task, you don't get a pat on the back. You just do the next task. Maybe that's the way I look at it. But when you're looking at sort of trading in the beginning stages, it's very, very exciting, and I understand the pats on the back, but you need to understand why it won in the first place, or on the other point of view, why it lost in the first place, and then you start to move forward. And if you don't understand how you won it or how you lost it, you won't actually move further forward as a trader. It's always going to be finger in the air. Okay, so let's have a little breakdown of what all of this is. My spreadsheet is very simple. I keep my rules here, just basic rules that I need in my mind. I do go off track from time to time, as with this one yesterday. I kind of pushed the boat out a little bit. I put an extra trade in and I had to sit on it all the time, and eventually I got killed at 9 o'clock at night. And it was my own stupid fault, you know, and that's because I was tired, I had a long day, and I'm trying to push this up, and I genuinely thought I might hit the jackpot, because basically what I wanted to do is I wanted to finish the challenge early just to show it could be done, but that was my own ego, and sometimes that's your worst enemy, and this proved that it was my worst enemy because I lost. So it taught me a lesson. Settle yourself down and go back to your rules. Because the other side of that is, because the question I asked myself was, would I have done that with my wage account? No, I wouldn't. I take no risks whatsoever with my wage and car accounts. I really don't. You know, if I have an inkling that I'm wrong, I just sit on my hands and have a cup of coffee. All right? And this goes back to the conversation we were having earlier about respect of an amount. You have to control that demon, and that demon is an emotion. And I constantly tell you guys, control your emotions. And this is the whole process. So it's a lesson learned, but I could see it was wrong, and it's cost me £1.26. It's not a lot of money. But from a teaching point of view to myself, I know I was wrong to do it. So will I do it again next week? No, because I'll remember this lesson. Okay. So let's quickly whip through the figures, and then I'll pull it up on the chart so you can actually see that these verify. There's the quick ones. There's the products that we traded yesterday. 95% hit rate. It's very good, but as I say, there is a lot of stop outs in there that were managed. It is 44 positions. Now the positions is a breakup of all of what's cashed out, which is not necessarily the orders. You see, when you see something like that where it's 3 TP1, what that means is it was the third trade of the day, but I broke that up into 3 parts. So I took profit once, twice, 3 times off a single order. But this will just make that into 44. Okay? And that's kind of the way the system works. If you cash something out, it classes it as a position. All right. We have grown our initial £300 to a gross of 551.09, and the difference between these figures here is the fact that I've actually drawn some money out into a physical bank account. You saw me do that in the last video. And there's also some interest in overnight charges that fluctuates from day to day. Okay. Our average pip win is just shy of 15, 14.9. I need to work on getting that up to about 20. The average win is £5.71. Now, bear in mind, we are dealing with 25p and 55p. That is a good win per trade. We've grown the account 83%, well, it's just shy of 84%. And we've got a total profit off our 300 since the start of this on the 2nd of November. Just move that all the way up to there. 2nd of November is 251.43. So I think that's pretty darn good. I really do. And the whole process of doing this was to get a little holiday. And if you saw at the start of this, we went on to a holiday website. There's the Scruffy squad away. Went on to the website, a holiday website, and we found a cheap holiday for just shy of £150. So it's £150 a head. Times that by 2, so I can take Joanne with me. £300. So essentially I had to double the account. Well, I'm nearly there, considering I wanted to achieve it by Christmas Eve. Okay, so at the moment, pretty good. Quite pleased. So let me pull up the working sheet. This is the account that I'm using. There you are. You can see the funds up on the top there. And if I move over onto the history, there you go. That corresponds to what you've just seen. Pull that over onto the actual history of the account so I can show you. It is a live account. There is the funds, and it is part of my multiple live accounts. I do have multiple accounts. The only ones you'll ever see me trade with is these two. These are private, they're mine. You'll notice that my wage account is a CFD, not a spread betting account, and that's just to do with tax. And if we do a breakdown over the last 24 hours, you'll see there's the deal tickets corresponding to what's on my spreadsheet. Can't really make it any clearer than that, guys. There is an analytics, which I've shown you from time to time. If I just put in the custom period here from the 2nd when I started it to now, this will show you what that has done. It altered it round because if you remember, we started this in October and we carried it forward. So this current month, as you see, the equity curve is going up quite nicely. And down here I have a return rate of 3.9, so that is going up as well. That is a barometer of how IG sort of monitor you. As long as you're over 1, you are profitable. My win rate corresponds to my sheet, 95%, and my risk reward, I am at 3 to 1 on my risk reward. So for all the people who kick it into me about wide stops, they're only wide at the start, you know. They're then brought into break even relatively quickly, or they are managed relatively quickly, and that's what gets us this, you know. I can't get it any clearer than that, guys. So I hope all of that made a bit of sense. It's really just an update of where we are and what we're doing. Hopefully I'll have this achieved in the next 2 weeks. I'd like to think so. But what I will say is, bear with me. You can hear Winky bouncing around in the background. She's cleaning the house, which she does each Saturday morning when I'm supposed to be out of the way, but I've decided to work at home today. Sorry, what was I saying? Lost me thread there just a second. Yes, sometimes when I'm looking at the trades and one thing and another, I am very mindful of the small account. And for all I want to finish it in the next sort of week or so, if it takes me to Christmas Eve, I'm not worried, because sometimes I have to sit on my hands and wait for a trade. Again, going back to the beginning conversation about if only, you know, if only I could trade this. It's a strange way to look at things. Just build it up from small positions, i.e. if you can't afford to trade the DAX, trade oil. They're both fast moving, both directional. If you can't afford to trade, say, GB, JPY, trade euro dollar. Cheap, and it moves quickly enough. And if the position isn't there to take, don't take it. Simple as that. So I'm going to leave it there, guys. I hope it genuinely made sense and inspires you with your own trading. And if you're stuck, by all means contact me. I'm easy found. All my contact details are in the description. And drop something in the comments. I genuinely answer every single one of them. So remember, guys, do what you love and the money will follow. See you all in the next one.